What if I told you that millions of Americans don't try to get rich overnight? They simply invest a little money consistently, and over time, many build significant wealth. So how do they do it? Here's the simple answer. The first thing to understand is this. The stock market is not a place to gamble. It's a place to own part of real businesses. When you buy a share of a company, you're becoming a small owner of that business. If the company grows over time, the value of your investment may grow too. But here's the mistake many beginners make. They chase hot stocks, hoping to double their money quickly. Successful long-term investors often focus on something much simpler. They invest consistently, diversify instead of putting everything into one company, and stay invested through market ups and downs. Another important concept is compound growth. When your investment earns returns, and those returns begin earning returns of their own, your money has the potential to grow faster over long periods. That's one reason many Americans start investing years before retirement, even with relatively small amounts. Finally, remember this. Stock prices move up and down every day. Short-term swings are normal. Many long-term investors pay more attention to years than to days. The biggest advantage in the stock market isn't luck. It's time, consistency, and patience. If you're just getting started, focus on learning before investing, because the more you understand the market, the better prepared you'll be to make informed financial decisions. Subscribe for more simple, no-hype explanations about investing in the U.S. stock market.